Greetings. You are now tuned into the Vault. Trust Christian own nothing, control everything. Just want to thank you for tuning in live, listening to replay. Always appreciate everybody that tunes in live, listening to replay. Basically, a ton of people are always going to listen in the replay. If you want to listen live and get the notifications, just make sure you hit the notification button to where you're actually going to get the notification when we go live. Otherwise, we definitely just appreciate everybody that subscribed throughout the years. We've had a ton of subscribers throughout the years. We've had a ton of listens throughout the years, and always just give thanks for those people throughout the years. The channel, we will still create content because this is something for a project for public notification that you can come from certain positions and you can grow into certain positions based off of study, based off of work. And so we're here to talk about that today. But we always want to thank everybody for tuning in live, listening to replay. This is the Vault episode 469, Forward Looking Indicators. This is one of those episodes, sure, we've had people come around for years. People have listened for years. Well, we've had other people come on, and whether you want to talk about trading, whether you want to talk about business, we've talked about forward looking, and now we're going to make sure that we talk about the indicators because we're in one of those markets that we do our best to add as much value as we possibly can, and it has been a major, the whether you want to call it like a, it's unfortunate that the public is not aware of what a forward looking indicator or true forward looking indicator is. A lot of times you'll get people that talk about forward looking things, but they're past data. So, how are we getting forward looking data? How are we getting forward looking indicators if we're looking at past data? And so, you see the marketplace out here. Oh man, look at this indicator, look at that indicator. It might be 1,000 indicators, it might be 1,000 plus data points. But are they forward looking or are they backward looking? How can we look forward when we're going off of past data? This is the funny part about it is that yes, there are pretty much indicators that for the most part they can look forward, giving quality predictions to forward looking situations. But this is still past data points. There's no future data point that's guaranteed. There's no forward looking indicator that's guaranteed. So, how do we look at the marketplace? How do we talk about the marketplace? People are talking about past data points. Could be from a month ago, could have been from 60 days ago. And these are the things that you hear in the marketplace. It's oh, we're looking at this data, we're looking at that data. But what is forward looking? Because, yes, if you're looking back, it may not correlate to the current market. It's data that's 30 days old, 60 days old, 6 months old, however many years old. We've sat around mentors for years where causation is not correlation. Many times, causation is not correlation. Oh, let's tie these two data points together so we can prognosticate, or what do they call it? Prognosticate a prediction. Well, we're here. We're already in March 2023. Oh man, trust Christian Vault. The market did this and it's been doing this. But yeah, what is it going to do forward looking? What data do you have that's forward looking? What forward looking indicators are you looking at? Are you looking at past data points? Or are you looking at forward looking indicators? Because forward looking indicators do rely on some past data points. But how many people are talking about truly what are forward looking indicators? When we look at GDP, has it slowed down? Yes. Is it negative? No. Negative meaning the growth rate is slower than it was the previous year. Could we see that? Possibly. We went through two big boom years. But forward looking, how are we looking? If we saw large lump sums of excess cash, cheap money in the market, low interest rates, that period's over. You got people coming on the internet saying, hey, I remember when I bought my house at 10% interest, 8% interest. This was over 10 years ago. And you got forward looking indicators right now saying that the market is scared of 3 and 4 and 5 and 6%. Is that true? Forward looking indicators. Are forward looking indicators saying that the market is going to go into a negative growth rate? Or is it just going into a slower growth rate? People say, oh, well, give me these sources. Give me these indicators that I need to have to look forward. Because there's so many. It's over 1,000 data points. Well, how do I get all this data? Should I look at the payroll? Should I look at GDP? Should I look at, interest rates? What should I look at? All these data points. Confidence for the sentiment of business. Should I look at PMIs? What should I look at? Forward-looking indicators. Fortunately, the forward-looking indicator is you. It doesn't have to be legal advice or financial advice. The forward-looking indicator is you. Because you got to pull the trigger on the information that you have to grow an asset, which is the idea, the information. How do you grow the information? By making that information yield capital. Forward-looking indicators. Oh, should I go read this magazine? This magazine. We've already talked about it many years. How people? We were sitting around some investors the other day, and they said, "We're talking about forward-looking indicators here." So we appreciate everybody for tuning in live, listening to the replay. And he would say, "How do you watch the news?" These investors say, "How do you watch the news?" Well, we watch the news because we're market agnostic. We watch the news because we're market neutral. We're not swayed by somebody else's opinion of the market. But clearly, if the news has a wealthy asset manager speaking, why not hear his or her position? Maybe they're talking against their position. Maybe they're talking for their position. If you can read body language, you can see these small nuances. So it's rather important for you to learn how to read body language. One, yes, they could be lying or they could be telling the truth. Rather important to be able to read those social cues. One, that's a forward looking indicator. Why? Because these people could be lying to you. Now you have a forward looking indicator of where big money's at, where institutional money's at. You can see their body language. Are they hyping their position? Do you see their breathing increase? Do you see them talking calm? These are asset managers. These are institutional investors. Sometimes they do bring on economists. So you can see how the economists speak against the economy. You can see how the strategists speak against the economy. You can see how the analysts speak against the economy. These are your forward-looking indicators. You're taking a pulse of the current market sentiment. If the market sentiment is recession and your portfolio is growing, looks like there's a broader market sentiment, consensus sentiment that you're just hearing out. That doesn't mean that's your portfolio. Clearly, it's not if you're making money and you're up. But why not hear the market consensus? Why not hear the market position of the other bigger money, the other bigger institutional investors in the market? Once again, we sat around investors. They said, why do you watch the news? First of all, we're sitting in the room with the Black Rocks, with these major institutions, and they're on the news speaking. So it's important to let them continue to speak for or against their positions. It's rather important to allow ourselves to hear the positions, even if you're not in it, even if you weren't looking for it, because it's a data point to see, okay, maybe I need to go check out that asset class. Maybe I need to go see what they're talking about. Your forward looking indicators. When they're continuously talking about a particular subject, does it warrant for you to go see not only the past history of it, because then you got these guys out here say, oh, I'm a technical trader, I'm a technical this. That's the past. So are you saying causation equals correlation? And that is not the case all the time. They have black swan events. So that means the past 2 years of whatever the market gave people actually took some people's retirement. Whatever the market took from people or gave people, that was normal. It wasn't. It was a black swan rebound. How do you predict those things? How do you have forward looking indicators? You listen to institutions. Institutions are holding people's retirement money. They're supposed to be safe investments. That's a forward looking indicator where they take people's money that's in a job and they put it in ETFs and mutual funds. Forward looking indicators is definitely looking at the news with a market neutral. You're training your emotions to be neutral about the money. If you're not neutral about the information, how are you going to be neutral about the money? They don't teach this in school though. Why? Because you're supposed to own something. So when you think it's your money, you might have more of an emotional connection to it. How can you think clearly if you have an emotional connection to it? And we're talking about money, forward looking indicators, even the information that you're receiving from institutional investors. Are you listening to it emotionally? Oh man, that can't be right. Oh man, I can't believe he said that. Oh man, I don't want it to be a recession. Ooh, ooh, ooh. All these people are saying recession. Ooh, ooh, ooh. The news has the narrative of recession. Ooh, ooh, ooh. Is it a recession in your house? We've been saying this for years. But oh no, no. The news has an emotional narrative. So how can you look at the data, technical traders? How can you look at the data non-emotionally if you're not willing to look at all the data non-emotionally? That's the forward indicator. It's being able to look at the information non-emotionally. What are you worried about what someone's saying for? Oh, are you worried about how they said it? Most of the time, most people in financial environments, they're not even worried about how they said it, but you are. Because they made it sound true. When it's just a data point. It's just an indicator that gives you a past data point for you to analyze non-emotionally. Forward-looking indicators. Where are these things? Where's the one that's going to give us the guaranteed prediction of the way the movement's going to go? Right. Is that causation based off of previous data? When things are at all-time highs? We're not saying that everything's at an all-time high, but okay, forward-looking, they say you sell at the top. Right. So when are you supposed to sell? After the institutions made their move or before or at the same time? That's why you listen to the institutions or you hear them out. When are they talking against their position? Are they talking for a position? Do you see something moving that goes against what they're saying at that moment? Forward looking indicators. Oh man, we were sitting around investors once again. Your parents may not even be able to talk about forward looking indicators. So we have a lot of youth that listen to the vault and they talk about trading. And they're sitting in a room recently and they were talking about the FMOC, and Jerome Powell talking about disinflation. And you see someone from a bigger institution, and then you got people that come on the news and they may talk against the man of the hour, almost second best to the president, because he's wrangling in what? The inflation. And we're sitting around investors, and they're aware of these things. They didn't teach that in public school. You went to public school. Did they tell you to listen to the Fed chairman that runs the money? Did they tell you how the Fed is helping you gain control over prices? So when you hear him speak, he's talking about helping you get lower prices on your goods. That's a forward-looking indicator. Oh man, inflation, inflation, recession, recession. That's the two words they got going on in your head. You can't even sleep at night, right? That's what people are not even going to sleep about right now. That's sad. Somebody else put a word out there in the universe talking about some daggone recession, some slowdown in GDP, and you think now you supposed to have a loss in income when they supposed to have a price wage war going on right now. And people are talking about, oh, a recession. We remember actually in 2020, 2022, early 2022. Oh man, it's going to be a recession at the end of the year. You know, Biden just got in office. The war just started in Ukraine. Things ain't going to be looking too good. They not? They not looking good, right? Forward-looking indicators have gotten us through that. Forward-looking indicators said, okay, well, we're going to get through this. Companies have done their layoffs. They did that all 2022. We're still into the first couple months, so let's give it a break. But there are companies that are laying off people. We're seeing it. Okay. They say it hasn't hit the broader market yet. And the Fed is not too concerned about unemployment or employment. What they're concerned about is helping you get your dollar to where you can buy houses, maybe at a cheaper interest rate again, back in the homeland. So you can, what they say, the millennials don't want to buy houses. Well, they probably don't want to buy them now, right? Millennials lived through free interest rates, zero interest rates, and they didn't buy supposedly, unless you were the super geniuses like they think. Oh, we racked up and got a bunch of them for Airbnb, and now we're stuck on them. And guess what? Hold on, here we go. Don't tell me the millennials are just as dumb as the 2008 old boomers that thought they were going to sell houses with here we go, a arm. You ready? Do you know what an arm is? If you don't know what an arm is, let's talk about it. An adjustable rate mortgage. So when the market has changed now, yeah, somehow they fell into the same 2008 situation that these boomers fell into, that the Xers fell into in the States. Oh man, well, we got a house and now we got an arm. It's called an adjustable rate mortgage. Right. We pray they don't have them. You should go look at the ARM default rate right now. That's a forward-looking indicator. The default rate, the defaulting, how often are they defaulting on the ARM mortgages? This is where we are. But we're supposed to have forward-looking indicators. So is technicals, previous data, a confirmation bias? Forward-looking indicators Appreciate Mississippi for tuning in live, listening to replay. Always appreciate Mississippi for tuning in live, listening to replay. Feel free to type into the chat where you're listening live or listening to replay from. Always appreciate that. We always, it's good to let people know, obviously, that listening to replay where people are listening in from. We always do our best to add value. This is definitely one of those topics that we had to talk about it. Why? Because so many people want to know what indicators to look at if you're not technical. Because technical's looking at the past. Oh, this is what they say. I'm back testing. So is that forward looking indicator when you're back testing? I had to see what I did right or wrong, what I could have did better. Right, because the market can stay irrational longer than people can stay solvent. Appreciate everybody for tuning in live, listening to replay. Episode 469, Forward Looking Indicators. We thought we did our best to give as much value as we could when it comes to what you call, what do I look at to predict the future for my finances, for the company. These companies actually make predictions of how much money they're going to earn. They've consistently done it, so now they're doing discounted cash flows. Let's see how much in the future our money's going to be worth based off of inflation, many other factors, and the fact that we actually are cash flowing right now. That's a forward looking indicator. Your past performance financially is a forward looking indicator. Really? Yes. Your past financial performance is why companies give people money. Whether that's through credit, whether that's through debt. But you got to be technical, or are you not technical? I thought you wasn't technical. That means you're looking in the past. Well, don't most companies base the reason why they're going to give you credit is based off of your credit what? History, loan amount, forward looking indicator. Well, if you could pay this in the past, it's probably likely that you could pay a little bit more into the future. How does that sound? A little bit more into the future. We're going to add on some basis points. We'll make sure if you can get from under the hole, we're going to put you under a few basis points so you have to dig just a little bit so you can do what? Show that you could pay more over a period of time. Forward looking indicator. That's how companies do it. Oh, you got a business plan. Forward looking indicator. Forward looking indicators are all around us, ladies and gentlemen. If you're living in the information age, the information is the forward looking indicator. The only thing is, are we looking at the information emotionally and biased, or are we looking at it non-emotionally, analytical, and looking at it with an eye of skepticism? Because even in financial reports, why would you own a company and speak ill against it? Exactly. So the narrative, even the numbers forward looking, are a guess. Forward looking indicators is the information around us, and the educated, confident guess that we make is a forward looking indicator. Your past performance of how well you've done is a forward looking indicator. Are you keeping track of your habits on a daily basis? Are you keeping track of the finance? Are you keeping track of things on a daily basis? That's a forward looking indicator. Whether people want to know it or not, that is the truth. We sit around so many mentors and business people. They keep track of their time. They keep track of the money. That shows you that they are looking for forward looking performances. And that's a forward looking indicator. Appreciate everybody for tuning in live, listen, replay. Feel free to reach out Christian at trustchristian.com. Once again, that's Christian at trustchristian.com. Look forward to hearing from you. Peace and joy.